Digi-Capital tracked startups, raising over $6 billion across hardware and computer vision in 2018, driven by large, late-stage deals in China. A decline in deal volumes, number of deals, during the first 3 quarters of the year stabilized in Q4, while deal value, dollars invested, returned to a 2-year average after large spikes from a few mega deals. Again in China, the next 6 months will determine whether or not this return to stability is a long-term trend. Via reinvestment volume, number of deals by stage. Note: see selected data in paragraph below. Free charts do not include numbers, X's and data from subscriber version, with underlying data sourced directly from companies and reliable secondary sources. There has been a gradual decline in overall via deal volumes in the last 2 years, with the most recent high well over 100 deals in Q4 2017. The stages which have seen the most variance are pre-seed and seed deals. Q4 2018 saw an uptick to approach 80 deals, although again pre-seed was somewhat limited, while accelerator deals, particularly HT's EVMX cohorts, skewed deal volume data. Even without them, the overall stabilization in the fourth quarter holds true, although to a lesser extent. As expected, there are always far fewer later-stage Series B through Series F deals. We will come back to this when we look at deal value, via reinvestment volume, number of deals by category in 2018. Note: heat map shows relative scale of deal volumes by category in 2018. The largest number of VR deals by category in 2018 were in CarTech, games, photo video, solution services, enterprise and smart glasses. However, there was a broad range of deals across 21 other VR categories last year. Again, the next 6 months will determine which categories we see and corporate investors focus their attention on going forward. However, the general market narrative last year guided investors towards the crossover between computer vision and AR. There were also some VR investments, such as Varjo, raising $31 million and Pico Interactive $24.7 million. Despite media coverage to the contrary, via reinvestment value, dollars by stage. Note: see selected data in paragraph below. Via deal value, dollars invested, has been lumpy over the last 2 years, with a few massive later-stage Series B through Series F deals dominating VC and corporate investment into VR startups, particularly in the breakout quarters of Q4 2017, Q2 2018 and Q3 2018, some of which were over $2 billion total per quarter and all of which are outliers. This is not unusual, as later-stage deals are typically much larger. The scale of deals in the Chinese market has been particularly impressive over the last 12 months. There were individual Series C deals over $600 million and one Series D in the $1 billion range, although over $1 billion was invested globally across all stages. In Q4 2018, the bulk of that was again in later-stage Series C deals, removing those outliers to focus on accelerator through Series B. The market stabilized somewhat to over $300 million invested, via reinvestment value, dollars by category in 2018. Note: heat map shows relative scale of deal value by category in 2018. By far the largest investment category by value, dollars invested, was CarTech, particularly Chinese companies crossing over between computer vision and AR, so not a pure place. Even removing these crossover investments from the numbers, there was still significant investment with Chinese companies in advertising, lifestyle and smart glasses categories, completing $100 million plus deals. In the West, smart glasses company Magic Leap did the biggest deal with its $561 million round. Mobile games company Niantic also raised a large Series C, some of which was revealed in December and which was finally announced as having topped out at $235 million with a nearly $5 billion valuation. In January, the January portion is not included in the 2018 numbers. There were other deals ranging from hundreds of thousands to tens of millions of dollars across over 20 RVL categories last year. What next in 2019? The first 3 quarters of 2018 saw massive growth of investment in China, together with significant decline in the United States. Q4 2018 returned to more normal historic levels of deal flow and dollars invested globally, including in the United States. But the first 2 quarters of the year could set the tone for earlier investment to come. Watch this space. Full details on all transactions in Digi-Capital's new 313-page augmented virtual reality report Q1 2019 on the RVL Analytics platform. Netflix has confirmed rumors from earlier this week and officially announced that it is hiring Spencer Neumann as its new chief financial officer, just days after he was placed on leave pending firing from that same role at Activision Blizzard. Activision Blizzard announced in a securities filing this week that it was letting Neumann go for reasons unrelated to the company's financial reporting, disclosure controls and procedures, though the specific reasons for the firing were not detailed at the time. Since then, Activision Blizzard has said in a press release that Neumann was terminated for cause for violating his legal obligations to the company, a violation that in all likelihood looks to be related to his quick jump over to Netflix. That same day, rumors circulated that Neumann was on track to be hired by Netflix as the company's key foe, and, according to MarketWatch, the company has since confirmed those early whispers. Neumann joined up with Activision Blizzard in May 2017, after leaving his position at the Walt Disney Company, and is now set to start as Netflix's financial chief early on this year, replacing David Wells, Netflix's key foe since 2010. Following Neumann's departure from Activision Blizzard, CEO Dennis Durkin temporarily assumed the responsibilities of key foe, though Activision Blizzard now says that Durkin will once again become the company's key foe, now that it's evident that Neumann has left the position for good. Over 30,000 games have now been released on Steam, a milestone that the platform quietly crossed in the earliest days of 2019. The number was spotted by PC Gamer over the weekend, and does not include any DLC or other non-game programs hosted on the digital distribution platform. In fact, adding DLC into the mix makes the number closer to 48,000. An updated tally of the count can be found by searching for nothing at all on the Steam store, then narrowing down that search to include only games on opting out of any interest-based filter Steam has placed on your account. At the time of writing, that number sits at 30,067. That's a little bit higher than the unofficial Steam tracker Steam Spy's own count of 27,397 lifetime Steam releases. So take the third-party tools numbers with a grain of salt. But Steam Speed did once again chart year-over-year growth for Steam. According to the site, 329 games released on Steam in all of 2018. That's around a 300 increase from 2017. As estimated count. Newsbrief, Niantic has officially closed the rounding of funding that leaves the developer $190 million richer. This comes after rumors circulated last month that Niantic was working toward a $200 million investment from the likes of Cinematic Gaming and Samsung. At the time, an unnamed source speaking to the Wall Street Journal said the investment would land Niantic a $3.9 billion valuation. The SEC document detailing the investment, however, makes no mention of the investors behind this $190 million funding round. But it is noted that 26 investors contributed to the sum in some manner. With this latest round closed, Niantic's lifetime fund raised has now surpassed $515 million. The investment comes as Niantic is both still actively supporting Pokémon Go and working toward the release of its Harry Potter-flavored augmented reality game Harry Potter, Wizards Unite, which is due today. The team behind Call of Duty published a blog post celebrating the fact that the Ant Group has named a Call of Duty game as the Q1 best-selling console game of the year. A decade straight.